Hello everyone, welcome to EduTap and welcome to Finance 360-degree sessions in which we cover the relevant and important finance current affairs, the RBI notifications, the RBI press releases, and today I have brought for you a very important scheme of the Reserve Bank of India, that is the PIDF scheme. So today we are going to discuss about the PIDF scheme. Everyone, welcome to EduTap and welcome to Finance 360-degree sessions. So now this scheme is one of the most important scheme of the Reserve Bank of India. Okay. So in today's session, we are going to discuss about the PIDF scheme, that is a very important scheme of the Reserve Bank of India. And from this scheme, we have seen the questions in the RBI Grade B examination. And this is the scheme that is relevant till now, till 2025. So there is the validity that will finish in 2025. So that is also what we are going to discuss in today's session. Okay. So let's discuss about the PIDF scheme. Let's start with this discussion. So good morning everyone, welcome to the session and let's start with this very important scheme of RBI. So before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, as well as join our Telegram channel where you will get the PDF of this session. So the link of the Telegram channel is provided in the description box below, and in the Telegram channel you will get the PDF of the session. Okay. So welcome to the session and let's start with the PIDF scheme, one of the most important schemes of the RBI. So under the payments infrastructure, PIDF is the Payment Infrastructure Development Fund. So the PIDF scheme, it was operationalized by the Reserve Bank of India in January 2021 and it was valid for a period of 3 years. But later on, it was extended by 2 more years. So later on, there was the extension that was provided of 2 more years. Okay. So here you can understand that the PIDF scheme, it is the scheme of the Reserve Bank of India which was released in January 2021 and it has the validity period of 5 years because it was brought for 3 years and then it was extended for 2 more years. Okay. So here you can see that infrastructure, see, whenever the payments have to happen, so the digital payments require some infrastructure. Like if you want to pay to the merchant, either the merchant should have the QR code or the merchant should have the POS machine, the point of sale machine through which you can swap your card, or there is the mobile POS that is required. Okay. So this is the payment infrastructure that is required for the payments that can happen to the merchant. Okay. So doing the payments to the merchant, for that there is the requirement of payment infrastructure. Now more and more merchants, they should receive the QR codes, they should receive the POS machines so that more and more digital payments happen and the usage of cash reduce. So this is the vision of the Reserve Bank of India in bringing the PIDF scheme. The objective of the PIDF scheme is to increase the number of acceptance devices multifold in the country. So to increase the acceptance devices, to increase the devices that can accept the payment. Okay. To increase the acceptance devices multifold in the country, there is the PIDF scheme that was brought by the Reserve Bank of India. So the PIDF scheme, it presently subsidizes, it provides subsidy for the deployment of acceptance infrastructure in the country. Okay, to different parts of the country, there is the deployment of acceptance infrastructure that is happening through which the digital payments can be accepted. So for that, the RBI is providing subsidies. So under the PIDF scheme, there is the subsidies that are provided for the deployment of the payment infrastructure, for the deployment of acceptance devices to the merchants. I hope this is very much clear that these devices are being provided to the merchants, and for these devices there are subsidies that are provided so that digital payments can increase in the country. Now validity. So validity period of the PIDF scheme is 5 years, that started from January 1, 2021. So till the end of 2025, the PIDF scheme is valid. Okay. So now PIDF target is to increase the payment acceptance infrastructure by adding 30 lakh touch points every year. So to include more and more merchants and to include the new merchants, so that the new merchants are able to get the payment acceptance devices, so that even the new merchants that do not have the payment acceptance devices, even they can accept the digital payments. For that, the new merchants are included in the payment infrastructure system. Okay, they are provided with the digital POS, or they are provided with the digital devices and the physical devices that we will discuss. Now governance structure of PIDF. So who governs the PIDF. So the PIDF is governed by the ex officio advisory council. So there is the advisory council that governs the PIDF. It is ex officio, that means the members of different important organizations are the member of the advisory council. Like the deputy governor of the Reserve Bank of India is a member of the advisory council, and so the different important members of different organizations, they are the member of the advisory council which governs the PIDF. Now the chief general manager in charge of the Department of Payment and Settlement System of the Reserve Bank of India shall function as the secretariat to the advisory council, and the advisory council, it provides the suitable rules for operating the PIDF scheme. So this is the idea about the PIDF scheme, to provide the payment infrastructure to the merchants, to the new merchants or to the merchants. There is the PIDF scheme that provides the subsidy for the payment infrastructure. Okay, so this is the idea. Any confusion anyone has till now? So now target geographies. So which are the target geographies? So the primary focus is given to the areas tier 3 to tier 6. So primary focus shall be to create payment acceptance infrastructure to provide the payment acceptance devices in the tier 3 to tier 6 centers. Tier 3 to tier 6 centers are, you can understand, they are the small towns or they are the small cities. So to provide the payment acceptance infrastructure to the merchants in the small town and in the small cities, there is the primary focus that is given to the primary focus is given to the tier 3 to tier 6 centers to provide the payment acceptance infrastructure in tier 3 to tier 6 centers. Now the scheme shall include the eligible beneficiaries covered under the Pradhan Mantri Street Vendor Atmanirbhar Nidhi, that is PM Swanidhi scheme. So there is the PM Swanidhi scheme. So there is the PM Swanidhi scheme, that is the special scheme for special microcredit facility for the street vendors. So there is the PM Swanidhi scheme that is providing the special microcredit, special small loans facility for the street vendors. So the beneficiary that are under this scheme, they are also eligible under the PIDF scheme. They are also eligible for the payment acceptance devices under the PIDF scheme. So the merchants, we can say, so the street vendors that are under the PM Swanidhi scheme, these street vendors are also eligible to get the payment acceptance devices under the PIDF scheme at the subsidized rate. So the scheme shall include the eligible beneficiaries covered under the PM Swanidhi scheme and PM Vishwakarma scheme. So I hope you know about PM Vishwakarma. So PM Vishwakarma scheme, it was launched on 17 September 2023 by Prime Minister to provide end-to-end support to the artisans and the craftspeople who work with their hands and their tools. So like the cobbler or the carpenter, boat maker, armorer, blacksmith, hammer and toolkit maker, locksmith, cobbler, stone breaker and such and such. So the people that are the people that work with their hands and tools, so to provide the help to the artisans and the craftspeople, there is the PM Vishwakarma scheme. Now the beneficiaries of the PM Vishwakarma scheme, they will also come under the PIDF scheme. So you can understand that the scheme shall include the eligible beneficiaries covered under the PM Street Vendor Atmanirbhar Nidhi and the PM Vishwakarma scheme, that is in tier 1 and tier 2 centers. So usually the primary focus is given to the tier 3 to tier 6, but in the tier 1 and tier 2 also the scheme will be provided only. So tier 1 and tier 2 are the big towns or they are the big cities. So in tier 1 and tier 2 the special focus or the scheme will be eligible for the PM Swanidhi beneficiaries and PM Vishwakarma beneficiaries in the tier 1 and tier 2. So this is the idea. Yes, so this is the idea, okay, that the scheme shall include the primary focus is to the tier 3 to tier 6, but in the tier 1 and tier 2 areas there will be eligible beneficiaries of these schemes that will also come under the PIDF scheme. Now there is also the special focus areas that are selected. So northeastern states of the country and the union territories of Jammu and Kashmir and Ladakh shall be given the special focus. So northeastern states, that is the 7 sisters in our country, the northeastern states of the country and the union territories of Jammu and Kashmir and Ladakh, they shall be given special focus, and there the deployment of the devices should also happen, okay. So this is the idea. Now coming to the type of acceptance devices covered. So what kind of acceptance devices will be provided? So first of all, physical devices like the POS machines, the mobile POS, the simple physical POS. So such machines will be provided for swapping your card. Okay. Now for the POS to work, there is the requirement of the PSTN and the GPRS. So they are the systems that are required for the working of the POS system. So they will be also provided, as well as digital devices such as the QR codes, the Bhim QR code and such. So the QR codes can be provided. So the type of acceptance devices that is covered under the PIDF scheme. So physical devices, digital devices, as well as the contemporary devices have also been included. So you must have heard, or like you must have seen that there is a QR code and there is a sound box QR code. So that also tells that okay, this much of the payment has been made. So this is the contemporary device that is also provided under the PIDF scheme, or that is also included under the PIDF scheme. So the other contemporary devices with hybrid or alternative mode of acceptance, such as sound box devices that has the sound box, so they are the QR codes and they also have the sound. Okay, providing instant audio payment confirmation along with payment acceptance by scan and pay, and near field communication also, near field communication tap and pay kind of facility. So these hybrid kind of systems that they have QR code as well as they are providing sound, or the near field communication, that is the device that is providing the tap and pay or the near field communication, they comes under the other contemporary devices, so they will also be provided. So Aadhaar enabled biometric devices can also be provided under the PIDF. So Aadhaar enabled biometric devices. So have you heard about Aadhaar enabled payment system? So under the Aadhaar enabled payment system, what happens that the merchant can get the payment. Let's say XYZ person does not have a mobile phone to do the QR payments or does not have the credit card to do the payments. So the XYZ person has the Aadhaar card, and using the biometric of the person, so using the Aadhaar card number and using the biometric of the person, the merchant can get the payment from the XYZ person. So this is Aadhaar enabled payment system. So the merchants can get the payment through the Aadhaar enabled payment system also, for which the Aadhaar card number and the biometric is required. So for that, biometric scan devices are also required. So under the PIDF scheme, the Aadhaar enabled biometric devices will also be provided or can also be provided. So this is certified biometric scanner devices facilitating Aadhaar authentication for acceptance of the payment by the merchant through the Aadhaar enabled payment system through the Bhim Aadhaar Pay. So that is the Aadhaar enabled payment system. So if you do not have a mobile phone, you cannot make the QR payment, or you do not have the credit card, because there are many senior citizens that might not be using the UPI system, or that might not be using the credit card. So for them, there is the facility of Aadhaar enabled payment system. Okay, so this is the idea. We will discuss that. So this is the soundbox devices that you can see. Okay, now an eligible merchant may be acquired. So there are the acquirers. See how the payment acceptance devices will reach to the merchants. So RBI will go to door to provide the payment acceptance devices to the merchants. So there are actually the acquirers. Okay, there is Visa, MasterCard, RuPay, credit cards in our country. So they want to boost the usage of debit cards and credit cards for the payment. For boosting the usage of credit cards, there is the POS machines that is required. Okay. So to boost the usage of POS machines, the acquirers are the ones that are the intermediaries between the consumers, between the merchants and the card networks. Okay, so card networks like the Visa, MasterCard and the RuPay credit card systems, so they are the card networks that want to boost the usage of credit card of their networks. So they hire the acquirers, that are the intermediaries that capture the merchants, that okay, you should take the POS machine, so that the cards, you can accept the cards. Okay, so that more cards are used, more cards are purchased, and the card networks will be benefited. So this is the whole system, that there are the acquirers that acquire the merchants, so that merchants can get the POS machine, so that they do more card payments. Okay, so this is the idea. So an eligible merchant may be acquired by the acquirer for one physical device. So the acquirer, that is the intermediary, can provide one physical device and either of one digital, that is QR code, or other contemporary device, that is soundbox system and such. So an eligible merchant can get one POS machine or one physical device and one of the digital or contemporary device, okay, under the scheme. In special focus areas, now if we are talking about the special focus areas, that is the northeastern states as well as the union territories of Jammu and Kashmir and Ladakh, so they are eligible, so eligible merchant, they can acquire for one physical, one digital and one other contemporary device each. So under the scheme there is special focus or there is special benefit that is provided to the special focus area, that is the union territories and the northeastern states, okay. So an eligible merchant can get one physical device and either of one digital or one contemporary device. But if we are talking about special focus area, so they can get one physical device, one digital device and one contemporary device also. As the cost structure of acceptance devices are different, now can we say that the QR code as well as the POS machine, they cost the same? The price of them will be same, yes or no? The QR code will have the same price as the POS machines that are used for swapping the card. Can we say so? No, we cannot say so, right? They have different cost structure. So as the cost structure of the acceptance devices vary, subsidy amount also differs, okay. So here, this is the location. On the basis of location, there is different subsidies that are provided, okay. So let's see. As the cost structure of acceptance devices vary, so for the physical device, that is POS machine, mobile POS, their cost is different. The QR code, their cost is different. So on the basis of their cost structure, their prices are also different, okay. So that is the idea. Now, as the cost structure of acceptance devices vary, there is also different subsidies that are provided for the physical device, digital device and other contemporary device. So in tier 1 to tier 4 areas, so tier 1 plus tier 2, these areas are not directly covered under the PIDF scheme, but the beneficiaries of PM Swanidhi and the beneficiaries of PM Vishwakarma of tier 1 and tier 2 are covered under the PIDF scheme. Now tier 3 and tier 4 are completely covered under the PIDF scheme, because the PIDF scheme is having the focus on tier 3 to tier 6, okay. So for tier 1 to tier 4 centers, the physical device subsidy will be 60% of the total cost, digital device subsidy will be 75% of the total cost, and the other contemporary device subsidy will be 75% of the total cost. For tier 5 and tier 6, that is the farthest of the areas, that is the most far off areas. So in the tier 5 and tier 6 centers, the subsidy will be 75% of the total cost for physical devices, 90% of the total cost for the digital and contemporary devices. For the northeastern states, as they get the special focus, for the northeastern states as well as for the union territories, there is the subsidy that is provided 90% for the physical devices, for the digital devices and contemporary devices, okay. So this is the idea. Now can the subsidy, if 60%, let's say total cost is 1 lakh, someone is saying that my total cost is 1 lakh and I want the subsidy of 60%, that is 60,000. So that doesn't make sense, because the physical devices should not be so much expensive, right? So maximum cost of physical device eligible for subsidy is 10,000. So this is the maximum cost for the physical device, okay, that is eligible for subsidy, including one-time operating cost of up to maximum 500 rupees. Maximum cost of digital device, that is the QR codes, eligible for subsidy is only rupees 300, because QR code should not be so expensive, okay, including one-time operating cost of maximum 200 rupees. Maximum cost of other contemporary device eligible for subsidy is only rupees 2,000, and one-time operating cost eligible up to maximum 300 rupees. So this is the idea, that there are also the maximum criteria that has been established, okay. Now types of expenses covered. So first of all, acquirers, that are the intermediaries that are acquiring the merchants to get more of the payment acceptance devices. So acquirers need to adopt a scientific process for identification of deployment areas, that which areas should be selected for deployment that has less of the payment acceptance device. Let's say there is a very small city, that is a tier 5 city, but in this city there is already the awareness about the digital payment infrastructure, and already the merchants already have the payment acceptance devices. So should we select this small city, or there is another small city that is a tier 5 city and that doesn't have the payment acceptance devices with the merchants? So which city, A or B, which should be chosen for the PIDF scheme? City A, which has already the awareness, which already has the payment acceptance devices with most of the merchants, and they already have the awareness, but they are a small city. Or the other small city that do not have the payment acceptance devices with the merchants. So which city? Both are tier 5. Both are tier 5. So which city should be chosen under the PIDF? Which city should be chosen for the PIDF scheme? The second one, okay, the B one, that doesn't have the payment acceptance devices with the merchants. Okay, so it has to, scientific process has to be undertaken to identify the areas where the deployment should happen, and the proposal has to be sent to the regional director, Mumbai regional office of the RBI. Okay, so this is the idea. Operating cost means that when the initial operating of the POS machine happens, so for that there might be some cost that is added, like the wires or the internet connectivity and such. Okay, so initially might be there can be some operating cost. So now an acquirer I have told you is a financial institution that is acting as an intermediary between the merchant and the card payment network. So between the merchant and the card payment network, the acquirer is the one that is the intermediary that acquires the merchant, okay, that provides the payment acceptance devices to the merchant. Okay, and the acquirer takes the subsidy and provides the subsidy to the merchant. So this is the idea. Now, subsidy shall be granted on quarterly basis. The scheme is on reimbursement basis. That means first provide the payment acceptance device. After providing the payment acceptance device, pay the merchant the subsidy amount. So payment acceptance device, let's say the merchant has got the payment acceptance device. So the merchant has given the money for the payment acceptance device. So first provide the subsidy to the merchant. After the merchant is provided the subsidy, the acquirer will get the subsidy from the Reserve Bank of India. So this is the idea, okay, that the subsidy given by the Reserve Bank of India is on reimbursement basis. That is, first you yourself pay and then we will provide the subsidy. Like for the LPG cylinders also, I think same happens, that we have to give the full amount and then the subsidized amount comes into our bank account. Okay, so for here also in the PIDF scheme for the payment acceptance devices, the complete amount has to be given and then on the reimbursement basis, the subsidized amount is given back. Okay, so this is the idea. Accordingly, the claims shall be submitted only after making payment to the vendor. So when you have given the subsidy amount to the merchant, then only you can claim the subsidized amount as a acquirer. So the subsidy claims shall be processed and initially 75% of the subsidy amount shall be released. The balance 25% shall be released later after ensuring. So let's say that you have 5 members in your family. Now you are saying that all those 5 members are street vendors. So I am providing the QR codes or the POS machine to all those 5 street vendors and such. So how are we going to see that, okay, you have actually provided the POS machines to the correct merchants or not? So for that there is the 25% of the balance shall be released only after ensuring that the performance parameters are met, are achieved. That is, including the conditions for active status of the device and minimum usage criteria of the device. That means the minimum usage shall be termed as 50 transactions over a period of 90 days. So if you are providing let's say if you are providing a QR code to a merchant, so at least there should be 50 transactions over a period of 90 days, then only it will be considered active or minimum usage. Active status shall be minimum usage of for 10 days over the 90-day period. So in a quarter, at least 10 days, there should be some minimum usage, at least minimum 50 transactions should happen. Okay, so this is the idea, that there is the minimum usage criteria and active status criteria. Minimum usage means that 50 transactions over a period of 90 days. Active status shall be minimum usage for 10 days over the 90-day period. Okay, so there is the active status and minimum usage criteria that is imposed so that the acquirer is not cheating with the Reserve Bank of India. So there are some criteria is there. So 75% of the subsidy amount will be released after the acquirer has given the statement that okay, this much of the subsidy has been given, or this much of the payment acceptance devices has been provided or has been given. Okay, so 75% of the subsidy amount will be released initially. Balance 25% will be released only after seeing that the minimum usage criteria and active status criteria are being met. Okay, so this is the idea. Now this we have discussed. So now acquirers shall submit their claims through their bankers to Reserve Bank of India. Acquirers, now as you know that acquirers, they are the intermediaries that are connected with the card networks, or they can be the intermediaries that are connected with banks also. Okay, so banks can also, to promote the POS machines, to promote the QR codes, the banks can also hire the acquirers, the intermediaries that can reach to the merchants. Okay, so this is the idea. So and the acquirers, intermediaries, they have some account in a bank. They have the account in the bank where they want to receive the subsidy, So acquirers through their banker, where they want to receive the subsidy, through their banker to they can connect to the RBI with self-declaration about the non-duplication of claims from other schemes. That means they have not taken any benefit from some other scheme. Maybe NABARD is running some other scheme, or maybe some other entities running some other scheme. So the acquirer has to do the self-declaration that they have not taken any subsidy from other schemes for the payment acceptance devices, and then only RBI will release the subsidy. Because let's say for the same physical device, for the same POS machine, the acquirer is taking the subsidy from NABARD also, from RBI also. So that is duplication, as well as that is like you are taking the subsidy from two places, that is wrong. So first of all, the acquirer has to do the self-declaration that they have not taken any subsidy from any other entity and they are taking the subsidy from RBI only. So there is the self-declaration that has to be done, that the benefit has not been taken from any other scheme. Uniqueness of terminalized merchants. So merchants should be new merchants, that are like, if the merchant do not has physical, like let's say the merchant already has POS machines and you are giving POS machine to this merchant. This is useless. This is useless then, because the person or the merchant already had the POS machine. So giving additional POS machine doesn't mean or doesn't improve the penetration of the POS machines or the penetration of the physical devices. Okay, so if the merchant already has POS machines or already has digital devices, that is the QR code, so the same merchant should not be given the POS machine again or the digital devices again. So this is the idea, that the merchant should be new merchants that are getting the physical or digital devices. And interoperability of deployed devices should also happen. POS and QR codes shall be interoperable. All initial claims shall be submitted for reimbursement of expenses less the input tax credit received, and so as per the format. The claim for balance of eligible subsidy shall be submitted. So the 25%, that is the balance of the eligible subsidy, this claim shall be submitted along with the self-declaration that the minimum usage and active status has been met. That means actually RBI do not check it directly. So after you have given the self-declaration, you have to, like the acquirer has to make the self-declaration that the minimum usage and the active status is being met. Okay, so RBI can later on check, like we do not, that out of, let's say someone has written 50 pages of answer. So the examiner checks the starting line or the headings only, and the material inside is not read much. So similarly, RBI can also select the data to be verified and such. So actually the acquirers, they self-declare about the fulfillment of the minimum usage or the active status criteria. The RBI do not see all the data. RBI can selectively see the data to do the verification just, okay, because RBI do not have the time to go to all the merchants or to use the data of all the merchants to see that the criteria are being met or not. So the acquirers actually have to do the self-declaration that the criteria are being met, and then the RBI can release the 25% of the rest of the subsidy. Later on, verification can also be done by the RBI. Acquirers shall submit monthly deployment reports to the RBI. Okay, so this is the idea. Now the status, see how much money is present in the corpus of PIDF. So this is the data as available of November 30, 2023. If the RBI releases the new data, then I will bring that for you. But this is the recent data that I had. So corpus of PIDF stands at 1026.37 crores as on November 30, 2024 as per the following details. So the contribution from stakeholders is 1467 crores. The contribution from the Reserve Bank of India is 250 crores. The contribution from the authorized card networks. So authorized card networks also contribute in the corpus in the PIDF scheme, as well as the card issuing banks, because they are issuing the cards, so they also contribute in the PIDF scheme. So this is the idea that RBI has contributed 250 crores and the rest of the amount has been contributed by authorized card networks, Visa, MasterCard and your RuPay, such cards, they contribute to the PIDF scheme, as well as card issuing banks also contribute to the PIDF scheme. The interest earned now on such huge hefty amount of 1467, the interest that was earned was also given, that was 100 crores. Okay. Next, subsidy payout. So subsidy that was given in the period, so that was 541. So this is the left out amount. Okay. So this is the idea. Random scanning happens. Yes. No, this scheme was not in use. I have, see, in the Finance 360 series, I am covering all the schemes of the Reserve Bank of India. So we have already covered the retail direct scheme, the internal ombudsman scheme, the integrated ombudsman scheme, and now we have also covered the PIDF scheme. So the schemes, I am covering the RBI schemes also in the series, because in the 2023 examination there was a direct question from the retail direct scheme and the scheme was not in use. Still a descriptive question came from the retail direct scheme. So all the scheme of the RBI is very important, especially the PIDF is going to end in 2025. So this scheme also becomes very important. Okay. Now before going to the questions, if you want to know more about a particular examination, you can go to edutap.in. You can go to edutap.in and here the EduTap's website is provided to you, where in the free material you can read the blogs to know more about a particular examination. So let's say you want to know more about the RBI examination or any particular examination. So you can go to the exam information section and here you can see for the examination. Let's say for RBI Grade B you want to know more. So for RBI Grade B examination you can know more about the exam. You can also get the strategy that how to prepare the different components, and you can also see the success story that how the toppers, what strategy they adopted and what, like if coming from different backgrounds, how they cracked the examination. Okay. Now if you want to see the courses also, you can go to the section itself and you can see the courses. You can go to the website and you can go and see the courses which you want to see and what is provided in the courses, as well as what is available in the courses, who all will be teaching, how much is the price, what is the off that is going on. So all of that you can see in the website, okay, in the courses section. Now this is the first question. I hope you will be easily able to answer this question. Now here, which of the following statement is or are correct in regards to the PIDF scheme of RBI, that you have to tell. Okay. No, I don't mind, Vivek. That just we can say genetics. Now this is the second question. Okay. Which of the following statements is or are correct in regards to the target geographies under the scheme? So you have to tell me the correct statement that in regards to the target geographies, which of the following statement is correct. Okay. So the retail direct scheme, there was a descriptive question on the retail direct scheme in 2023 and this scheme was not in news, but still the question came because this is a RBI scheme. So I hope you understand that the schemes of RBI are very important, as well as the objective question can also come from the PIDF scheme, that it is valid for how many years, as well as the PIDF scheme the question can come on the target geographies or the subsidy percentages. Okay, so this is the idea. Now any confusion anyone has? So if you have any confusion, you can write in the comment section also, and do give me the right answer of the homework question. Do give me the right answer of the homework question also. So this is it. I hope you were able to understand the session. I hope you were able to understand the scheme. If there is any confusion, you can write down in the comment section below. Okay. Yes, you have to keep in mind the target geographies. So there are only three areas that you have to remember. The target, like the primary focus is for tier 3 to tier 6. Then there is PM Vishkarma and PM Swanidhi, tier 1 and tier 2 that are focused on also. And then there is the northeastern states, Union Territory of Jammu and Kashmir and Ladakh. So yes, this you have to remember, okay? You're most welcome, Swapnil. So I hope everything is clear now. So thank you very much for joining the session, and let's meet in the next session, okay? Schemes, just only these 4 or 5 schemes are there. The PIDF scheme, Retail Direct scheme, and your Integrated Ombudsman scheme, the Internal Ombudsman scheme, LRS scheme, just these are there. Okay, these are the most important ones that are there. So I hope this is clear. Now, thank you everyone. Thank you.